Getting started with investing can feel like walking into a casino in Vegas for the first time. Stocks, mutual funds, bonds. It's enough to make anyone want to bury their money in the backyard and hope for the best. But don't worry, in this video we'll break down the 8 main types of investments in the share market. First up, stocks, also called equity shares. When you buy a stock, you're buying a tiny piece of ownership in that company. Think of it like owning a slice of your favorite pizza place. If that pizza place starts selling out every day, the value of your slice or your stock goes up. And just like a pizzeria owner gets a cut of the profits, as a shareholder, you can earn dividends. But here's the thing about stocks, they're volatile. Always do your research. Don't invest money you need right now. And remember, patience is key in this game. Now, maybe you're thinking, this all sounds great, but I don't have time to research hundreds of companies and pick individual stocks. That's where mutual funds come in. Instead of picking out individual stocks yourself, you contribute to a pool of money that's managed by professional investors. The beauty of mutual funds is they're a great way to diversify your portfolio without needing a PhD in finance. Next up, we have ETFs, or exchange-traded funds. ETFs are a lot like mutual funds, but with a twist. Most ETFs track a specific market index, like the Nifty 50 or the S&P 500. They trade on stock exchanges just like regular stocks, which means you can buy and sell them throughout the day. Now let's move on to something a little different, bonds. Think of bonds like giving a loan to a friend, except that friend is usually a big company or the government. You lend them your money for a set period of time, and in return, they promise to pay you back with interest. Bonds are generally considered lower risk and offer lower returns compared to the potential roller coaster ride of the stock market. Now things are about to get a little more complex, so buckle up. Let's talk about derivatives. These are financial instruments that derive their value from an underlying asset, like a stock, a commodity, or even an index. There are 2 main types of derivatives, futures and options. Futures are contracts that obligate you to buy or sell an asset at a specific price on a future date. Options give you the right, but not the obligation to buy or sell an asset at a certain price within a certain time frame. Ever heard the phrase, get in on the ground floor? Well, in the world of investing, that's what an IPO, or initial public offering, is all about. It's the first time a private company decides to go public and sell shares of its stock to the public. Investing in an IPO can be exciting. You have the potential to get in early on a company you believe in and potentially ride the wave of its success. But remember, not all IPOs are created equal. It's crucial to do your homework and carefully evaluate the company before you invest. All right, let's talk about real estate, because who doesn't love the idea of owning a piece of the American dream, right? But buying property can be expensive and time-consuming. That's where REITs, or real estate investment trusts, come in. REITs own and manage income-producing real estate properties like shopping malls, apartment buildings, or office spaces. They pay out a good chunk of their rental income to shareholders in the form of dividends. Last but not least, let's talk about index funds. These are like the all-star players in the world of investing, aiming to match the performance of a particular market index, such as the S&P 500 or the Nifty 50. Index funds are known for their low costs, simplicity, and long-term growth potential. Legendary investor Warren Buffett himself is a huge fan of index funds and even recommends them for most investors. So there you have it. 8 different ways you can start investing in the share market. Start with what you understand, stay consistent, and focus on your long-term goals. If you found this video helpful, give it a thumbs up and share it with a friend who's also looking to start their investing journey. Thanks for watching, and as always, keep learning.